Well, good morning, and thank you all for joining us this morning for the Nebraska Chamber's Tax 101, how our Nebraska tax system works and perhaps doesn't. First of all, I'm Bryan Slone. I'm the president of the Nebraska Chamber, and I want to thank you for attending. And I also want to thank our sponsor today, Coley Jessen Law Firm in Omaha. Appreciate their sponsorship very much of this. And I want to talk about a little bit how we got here. In Nebraska, we're incredibly fortunate to live in this state, and we're incredibly fortunate to live the lifestyle and quality of life we live. But we do complain about a few things, and one of the things we probably complain most about is taxes. And so this session is really the genesis of some conversations we've been having at the staff level at the Nebraska Chamber since last September. For those of you who don't know, the bulk of my career I practiced as a tax accountant and tax attorney. And then when I retired in 2014, I started teaching at the University of Nebraska and also working as an attorney. But the teaching of tax was something I loved a lot. And so the staff is humoring me by letting me do this three-part series. And this three-part series is really to do one thing, and that's really to set the table for a broader tax discussion. In this three-part series, we're going to spend today just 30 minutes each time, 30 minutes today talking about how we got here as a state in terms of our local taxes and spending and how it actually works, how our system works. It's a very, very complex system in Nebraska, so we'll try to simplify it and make things easy about how we tax and spend in Nebraska. The next second session will be focused specifically on how does our system compare to other states? Where are we different? Where are we the same? What makes us competitive? What gives us a competitive disadvantage? And then in the third session, I'm really going to focus on key principles in tax policy with a view to my prior life when I had the opportunity to work both with Congressman Dobb on Reagan's 86 Act, but also on its implementation as a lawyer for Commissioner Gibbs. In terms of what are general principles, particularly in today's economy, that tend to create a more competitive and more efficient and more importantly, maybe a more fair tax system. So let's jump into it and talk a little bit about how we got here. And so Jenna, if you can help me with the next slide. I always start a discussion of Nebraska's tax system by going back a little bit in history, back to the formation of the state. The truth of the matter is, for most of us in this state, we're a handful of generations from a bunch of people who immigrated to this country for a variety of reasons, many of which didn't speak English when they arrived. In my case, my ancestors were Irish and Scots, and while they probably spoke English, I doubt many understood their accents. But the history of our state is one of immigration. It's one of people coming to the state with some very strong core principles. It was founded by individuals who were leaving countries for more individual freedom. There was generally a distrust of their national and particularly their regional governments from where they came from. That played into how this state was founded. You can find it in our Constitution. So I'm going to start with our Constitution. And back to the times that we were a territory, there was a considerable distrust in this state in terms of how people viewed Lincoln and whether they trusted Lincoln. And historians can argue maybe they had some reason to distrust some of our territorial governors. So our Constitution in Nebraska is very much set up to maintain local control. And that is a core principle and value in our state, is that local control of government taxing and spending is central to the government that in the 1800s our forebears created, and it continues today. And you can see it creates a great deal of complexity in our system. But I don't think that principle of local control has diminished that much, having lived both in Scottsbluff, Gearing, and now in Omaha. I think from all the way from Scottsbluff to Omaha, local control and the importance of local control still has a very significant effect on how we view our government. So if you look at our Constitution, the other historical piece about this is from a tax standpoint in this country, going back to the Revolutionary War, we are a country of tax protesters. Our country was built out of some very famous tax protesters. In those days, it was generally property taxes and consumption taxes. Although the consumption taxes were excise taxes on just about every good you could imagine, that ultimately raised the prices of goods that were purchased at the time. But it was basically based on consumption and then on wealth. And in those days, wealth, certainly in the 1800s and the early 1900s, wealth had a lot to do with how much land you owned, because land was the principal asset, the income generating asset at the time. And so for a very long time, almost close to 100 years, even in Nebraska, wealth was associated with land ownership. So it's not surprising in our Nebraska Constitution that there's a lot more focus in our Nebraska Constitution on property taxes than any other kind of tax. Also, historically, we did not have an income tax in the United States until the early 1900s. And so the earliest forms of our Constitution would not have reflected that income tax. So let me take you through just a few things in the Constitution which really have an effect on how our tax system is created, which is while the state legislature is allowed to direct how taxation will occur in this state, they are prohibited from levying property taxes for state purposes. Therefore, property taxes inherently in this state constitutionally are local tax. The assessments, the collections, everything is done at a local level. And so when we turn to the state government for solutions on property taxes, there are things that the legislature can do, but there are also things that they can't do. And so ultimately, property taxes is an issue of local taxes, and it has to be addressed at both levels. The Constitution has been amended to allow us to have an income tax based generally upon the United States system, a piggyback system. We do have differences from the United States system, but generally we have a big piggyback system where we use the same principles that are used for federal income taxation in Nebraska. The Constitution does provide that there needs to be free instruction in public schools, and then certain fines and penalties. Certainly, if I get a parking ticket in Omaha, it's my understanding that those fees or penalties go to our local schools. Jenna, if you could push the next slide. I'll move through our Constitution again, just to give us a backdrop for where we are. Generally speaking, property taxes require a uniform valuation methodology and need to be proportionally applied against real property, but there are exceptions, not surprisingly, in a state like ours for agriculture and horticultural land. There's also exceptions for charitable entities, the homestead exemption, and for government property, which does become important in certain communities in the state. We also tax tangible personal property at depreciated cost. The Constitution allows the legislature to provide different motor vehicle taxes, which we're all very much aware of, and for exemptions and separate methods for things like livestock inventory and household goods. So the Constitution sets up a general framework for Nebraska taxes. And if you'll turn the slide, Jen, I'll take us through what that's really become. So in Nebraska, it's really important to understand that really we have a bifurcated government, a bifurcated tax system. And it's almost 50-50. It's surprising how close it is. On the state government side, in terms of what the legislature basically has direct control over in terms of general fund revenues, it's principally, and we'll take a deeper look at this, but it's principally state sales tax and state income taxes. Remember, the state is not collecting property taxes. And so rough justice, and just for our purposes here today, let's say about $4.5 billion of sales and income taxes to the state general fund. On the flip side, then we have about the same amount collected through local government assessments. And this could be school districts, you can see up there, counties, cities, fire departments, ESUs, you name it. And I'll give you a little deeper dive into this. About the same amount is controlled at the local level. And remember, this notion of local control was fundamental to our Constitution. When we became a state, it continues to be fundamental to how we view our state. And so really, our tax and spending system is really split in two, and it's almost 50-50. At the local level, it's real property tax and personal property tax that make up the vast majority of those revenues. And so let me start breaking that apart a little bit, because then it helps us understand the complexity in our system. So Jenna, if you would move me to the next slide. So I'm going to take us to the state general revenues, and then I'll move to the local side. If we look at the state side, the bulk of our general revenue funds come from individual income taxes, sales and use taxes, and corporate income taxes, with corporate income taxes being a much smaller amount, only about 8% of our total general revenues. Those three things, individual income tax, sales and use tax, and corporate income tax, are 95.7% of our revenues in the general fund. And so it's at the state level, it's not all that complicated. And while our individual income taxes and our corporate income taxes do have some special deductions or exemptions or other things, generally speaking, our individual income tax and our corporate income taxes follow the federal law. And so when there's changes in the federal law, oftentimes, and most often, that gets mirrored in our state income tax laws. From a sales tax standpoint, since we don't have a national sales tax, that's pretty much all ours. If you look at our sales tax, it's primarily on tangible goods sales. There are some taxes on services and some taxes on intangibles, but generally it's on tangible goods. And that sales tax at the state level is also accompanied oftentimes by a sales tax at the local level. And these numbers here are simply the state sales tax numbers. So you can see in terms of what the legislature has a direct ability to influence completely, it is on the individual income taxes, sales and use taxes, and corporate income taxes. And so let me turn to the next slide and talk about where that money goes, a little over $4 billion, and how that's spent. At the state level, we collect sales and income taxes and then some miscellaneous excise taxes and other taxes, but generally the bulk of the state funding goes to four areas: health and human services, which is the biggest, state aid to schools, K through 12, higher education, and public safety. And so when you add those four things together, that's 95.7% of those general fund dollars. And so health and human services being the largest includes things like Medicaid, long-term care facilities, children and family services, developmental disabilities assistance, behavioral health assistance, and public health, which has been a very important part during this COVID crisis of our state operations. Health and human services, at least in the most recent decades, and particularly Medicaid, has been faster growing than other parts of the budget. And it's important when you look at this pie to recognize that while the unicameral has a lot of influence over the revenue side, the spending side, and this is where we need Senator Stinner and members of the Appropriations Committee who could probably deal with this better. But generally speaking, there are limits on what the legislature can do in this area, primarily because of federal mandates and also federal restrictions that come with federal funding for some of these programs. And so the flexibility of the legislature to affect the spending side is actually less than the tax side. But nonetheless, the legislature, and it should be noted, the legislature and the government has done and the governor has done a good job, really good job, of controlling state spending and the growth of state spending generally. And so we are not a state that, at least in the recent decade, has had significant increases in state spending compared to other states. State aid to schools, you'll remember in the Constitution, there's a requirement that the state provide for public schools. This state aid is in addition to property taxes that are collected locally. So it's a $1.3 billion from the state, and then a property tax allocation from local property taxes to fund our schools. Higher education is what you would expect, our universities and state colleges primarily. Public safety is generally law enforcement, corrections and prisons, and fire services and things like that. So I think that gives you a sense. So at the state level, I'm not going to say it's simple, but it's a lot more straightforward than it is at the local level in terms of basically 3 forms of tax, basically 4 big sections of the pie. And for the committees that deal with those sections of the pie, it gets complex in detail, but it's pretty understandable. About $4.5 billion, rough justice. It's actually slightly different than that, but generally a 50-50 split with local governments. So let's turn to the local government side. Of the state income that comes in, a significant portion of it then goes back to local governments in support of local governments. And so one of those things that we noted before, the largest is what's called TIOSA, which is our state aid to schools, but also the new Property Tax Credit Act, special education. You can see the list, community college, homestead exemptions, on through the list. So a very significant portion of the state budget actually gets returned back to aid to local spending. Again, very consistent with our local control principles of the state. I just wanted to throw those up so you had a sense of where that money was going. If you could turn to the next slide, Jenna. So now we're back to the local side and the other 50% of the equation. And when you look at this, again, a little over $4 billion in property taxes raised at the local level. But here's where it gets complex, is the number of what I will call taxing districts, at least budgets that require needs that then trigger taxes, is a very complex matrix of taxing jurisdictions. The largest, obviously, on the bottom are the K through 12 school districts, of which we have 245. We also have 93 county governments. We have 529 cities and villages, 6 community colleges, 23 natural resource districts, 410 rural fire districts, 17 educational service units, 395 townships, and 613 other miscellaneous taxing entities that ultimately go into our total property tax bill. If you add, while the school district bar looks big, if you add all the others together, it's almost as big as the school district bar. And what we know about property taxes, and certainly we get a lot of complaints about property taxes, is whether the valuations are right, whether the levies are right, whether the system's right. We'll get into that at some point. One of the issues is just the sheer complexity of this at a local level. Remember, this is half of our government spending, basically. And you've got over 2,000 separate budgets that you're dealing with here. And in terms of how the state was originally formed and how we're set up even legislatively, is to have a very open process. So we have a single body legislature. It's nonpartisan. There are open hearings. All the bills get hearings. Ingrained in our culture as a state is this notion of openness, and certainly our Constitution and certainly George Norris and his effect. The goal was not to create situations where there wasn't clear public scrutiny over how we spend and how we tax. The fortunate thing in this state is really that we all know our greatest asset is our people. And so I'm always amazed at the quality of people that we get that are our mayors, that run our schools, that work in our legislature, who become senators. You don't read stories in this state very often of corruption or other issues that you see in other states. And I'm always amazed with the 49 senators that we work with every day. For $12,000, they do this incredible job. And whether they always agree with the chamber or not, these are really good people. And so it's not the people involved, but the complexity of this makes it very difficult for taxpayers to really have a clear view to how we tax and spend. There's no way for a taxpayer to gather the data on these 2,000 entities and have a clear view into it. So one of the things that I think that we will focus on as we talk about tax reform is not just the taxes themselves, but the transparency and data available to taxpayers, and how we hold public hearings, and how we do that in today's environment that makes some sense. So if you turn slides, Jenna, I want to bust a couple myths. And some people are not going to like this, but is what it is. Everything else, I've put the source of the data. This urban versus rural comparison, I will admit, if I put the source, it would be Slone's back of the envelope calculation on 2018 data that I did several months ago for some friends. And basically it comes from the notion that I have lots of friends out west from where I grew up, and lots of friends now in Omaha where I live. And if I ask my Omaha friends, they will say the tax problem is that the rural counties are not paying their fair share, and the urban counties are having to cover for all these expenses in the rural counties. And if I talk to my friends in the rural counties, they will say the problem is that the urban counties are not paying their fair share, and all us rural counties are paying their taxes. So I did this rough back of the envelope based on 2018 data several months ago. And I just took Douglas, Sarpy, and Lancaster, which are our three largest counties, and then the other 90 counties. From a population percentage, those three largest counties are 50%, 6% of our population in 2018. The remaining 90 were 44%. I don't think that surprises anyone. And then I took, and the reason I used 2018 was it was the last year I could get really comprehensive data for at that time. From an individual tax standpoint, those three large counties paid 64% of the income tax, while the rural areas paid 36%. The offset, though, is when we get to property tax. In the property tax area, the rural counties actually pay over their weight in property tax. Not surprising because of all the farmland, particularly, that we have in rural Nebraska, and also all the government exempt land that we have in more urban areas. And so when you add those two things up and you take the numbers, basically what I found out in 2018 was somewhere between 350 and 400 million. The urban counties were paying excess income and sales, but by about exactly the same amount, 350 to 400 million, the rural counties were paying excess property tax. This is why you will find that in rural counties, property tax is probably a bigger issue, and in urban counties, income and sales taxes are probably a bigger issue. What my conclusion from this, and I've not run any further numbers for 19 and 20, and it will have moved a little bit with the property tax reductions, but you know, directionally it's going to be about the same, is anything we do on taxes in this state, and if anything, the last 3 years of working at the chamber, and certainly through this COVID experience, I've learned is we are absolutely connected as a state. Anything we do to create a better tax system has to not only deal with the issues of our large urban counties, but also has to deal with the issues of our rural counties. And fairness ultimately is going to require balancing these three legs of the stool in a way that makes sense. So if you would turn to the next slide, this is property tax relief that we've already passed. Very significant property tax relief, and kudos to the governor and the legislature. But even with all of this property tax relief, last year's income tax credit program, the property tax credit relief fund that's been around for many years, and our homestead exemptions, Even in 2020, valuation growth was still up 2.29%. Property taxes grew 3.74%, and we're at 4.3 billion of property taxes. So where do we go from here in terms of thinking about our state code? If you turn the next slide, Jenna. I'm going to get into the next two series. I'm trying to keep these at 30 minutes as best I can. To then, how do these three buckets compare to other states, and how does this local control piece compare to other states? And then on April 29th, we'll talk about key concepts in terms of talking about where we might go as a state. There won't be a proposal in any of this, but really key concepts. And I'm going to borrow some from the Reagan bill in '86 of key concepts of what kind of tax codes really drive greater economic growth. And so with that, there aren't any questions in the Q&A piece, but I would entertain a question if anybody wants to put it into the Q&A piece at this point. Well, let me finish with this and keep it within the 30-minute period. I hope you'll join us again on April 15th when we talk about how we compare to other states. I hope this is helpful in terms of thinking about not only how our tax system is structured, but how we got here. We'll talk a lot more about what doesn't work so well in the next session. And lastly, again, a big thanks to our sponsor today, Coley Jessen. So everyone take care, have a great day, and we'll see you on April 15th, which is of course tax day. And for us tax geeks, this is a big day. So take care and thank you.